Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, here to dissect the action in the markets at verifiedinvesting.com. All right, so we have a lot to go over here, folks. Again, markets yesterday getting absolutely crushed. We're seeing continuation today. So initially we saw like Nvidia trying to bounce yesterday after hours into today. It has now fallen apart below $110. In fact, it got as low as around 108.90 or so in the pre-market action. We're going to go over that chart, the key levels to trade. We're going to go over Tesla today. We're going to go over many other key movers, but let's start out with where the S&P is. So follow me over here to the big screen, and we can see very clearly that the markets yesterday, this was yesterday's sell-off, the big dump with a little bounce into the end of the day. After hours right here, this is your price action after hours, and then as we get later into the morning, going into the stock market open, you can see we have come back a little bit more. So right now, S&P down about 0.5% pre-market, which is a pretty big move for the early stages. But again, this is on the back of a major drop yesterday in the S&P. Now, the NASDAQ, folks, if you're looking at the NASDAQ 100, as of the gap down today, it'll be close to 10% off of its all-time highs, so we are getting towards those correction levels. All right, the big thing to watch here on the charts, if we take a look at the daily chart, this is a channel or almost parallel lines that have been keeping the market in check since 2023. This is 2023 over here. In fact, this low right down here was October of 2023. And we can see right here, it hit right there. It bounced up, continued its trend. It hit here, and now it looks like it is finally breaking the upward trend. And again, for those of us that are trend watchers, that are chart watchers, this tells us something. This tells us that the bull market that has lasted since the last bear market, it may, and I say may because we don't know for sure, but it may be coming to an end, and it may be ushering in a new bear market. We'll have to watch and see. All right, so again, we're going to keep a very close eye on where things go today. I'm looking to see, does the S&P confirm the breakdown today? Well, to confirm it, what we would need would be a close on the daily chart below yesterday's low on the S&P 500. If that happens, it's a confirmed breakdown and raises the probabilities that further downside is very likely in the coming weeks and months. All right. Back to the computer we go here to bring up some other charts. We can see the NASDAQ 100 right here. You can see that already had broken its shorter-term trend line right here. In fact, yesterday it even closed below this technical support and is trading lower today. Now, if we zoom out, how low could this go? Well, I'll show you something here. If we bring up the January 2023 low and we connect it through these lows, and I'm going to kind of clear out the rest of this because we want to focus on this trend line here. So this goes back to January of 2023, which was basically the bottom of the bear market. That connects again perfectly through October 2023 to the low exactly in August of 2024. That is your new short-term target range at around 484 to 485 on the QQQ. So that's about $10 lower than where we currently sit on the QQQ. Could it be hit today? It could be. We will watch and see. All right, flipping over to Nvidia. Now, Nvidia is actually bouncing a little bit here in the pre-market. Take a look at the pre-market action. So Nvidia was just getting trounced here. Now it's bouncing back beautifully. Although, again, it's still down about $3 here from where it closed yesterday. So it's still down sharply, but this is a nice little recovery starting. The question is, does it have legs or will it get rejected? Now, looking at the daily chart, this is pretty big because, again, here's your trend line right here. We broke and closed below yesterday. So again, just like the S&P, do we confirm? And to confirm, we would have to close below yesterday's low of around 112.25. Now, currently we are below that in the pre-market, but we have to see when the market, the bell rings at the end of the day, where the NASDAQ, or I should say the Nvidia chart, closes. If this does close below, you'll get some bounces. This might even see a retrace to the scene of the crime here at 122, but you would expect further downside. There is something else that I have to go over here that is pretty jarring in terms of the chart of Nvidia. So if we zoom in on Nvidia, what does this look like, guys? All right, quick quiz for you guys at home or wherever you're watching. This, to me, looks very similar to a head and shoulders pattern. All right, I'll draw it in for you guys. So here's your left shoulder. Here's your head up to here. And here is your right shoulder. And if this is true, we triggered it with yesterday's close. If that's the case, you guys want to see something that's scary? Take the high of the head right here, drop a plumb line straight down to that neckline, okay? Now take that distance and you measure it. That's just called a measured move from the break of the neckline. So right from the neckline here where it broke yesterday. And if we do that, look at your downside potential target on Nvidia. This would be a completion of this pattern to about $70 a share. All right, and again, I want to be clear on this. $70 a share is the long-term target based on the head and shoulders calculation of where it would complete. It doesn't mean we're going there tomorrow. It doesn't mean we're going there next week or even next month. It could literally go down to, let's say, 100. We bounce back to 120. Then it goes to 95. We bounce back to 100. Like, it literally could take 6 months or more. But the point being is that for us, that might be saying, hey, when is Nvidia a good long-term investment? The $70, $68 range, that might be a level where it starts to get intriguing, all right? And again, that's a calculation based on technical analysis. I have no clue if it will achieve that, but if it does, that to me would be a significant technical level. SMCI, let's flip back to the charts here. SMCI is down today. I love SMCI down here, folks. I already added in the pre-market with members in smart money stocks and ETFs. We bought here at 33.55. It's already back to, or excuse me, 33.50. It's all the way back to 35 here. And the kicker here is that you have a retrace to the scene of the crime, an inverse head and shoulders right here, broke out, and now it's retraced into the scene of the crime, and you also have additional support right here, which we tagged pre-market. So that's a big area right here. Could it go as low as here? Sure, it could. That would be just an add level for me, but really, in this range, we should see some sort of technical bounce in the chart of SMCI, which, by the way, again, it's already about $1.50 off of its pre-market lows. Nvidia today, guys, let's take a look at this. In fact, I'll go over to the big board, and we'll talk a little bit about Tesla here. All right, so we have Tesla down again today. It got 2 downgrades today where the analysts cut price target. Again, they cut it to like $380 or whatever it is. I mean, it's still a lot higher than current levels. But what it does is it shows you that the sentiment is bearish on the stock. So it's driving it down pre-market, trading at 274. Now, many of us would say, okay, this is a bearish thing. I start looking at it like, okay, where is the swing trade? Where is the technical day trading bounce going to come in? And for me, I start saying, okay, this has now fallen from $480 all the way back to 274. That's not quite in a straight line, but pretty darn close. I also start saying, okay, there's a gap fill here, huge gap. This was, by the way, this was the closing print before the U.S. elections, where after the U.S. elections, it gapped up and had this monstrous bull move, right? So again, the idea is it's done a full, at this level, it would do a full round trip. Now, what price is this? It's around 262 to about 252. There's a range here. Why is there a range? Because you have the upsloping trend line here, right, that goes to about 262, and then the gap fill is at 252. So there's a technical support zone where I will actually look to swing trade this. Not sure yet, is it going to be near the 262 or 252, or do I split the difference? I'm not sure yet. But the point being is that on a technical, taking emotion out of the trade, taking all feelings about Elon Musk out of the trade, all of that, which is what true technicians do, you start to say, okay, there should be some sort of technical zone here for a bounce. And again, you can see the gap fill here from the elections, the upsloping trend line, how they're basically merging into that level. So I'm going to keep a close eye on that. We're only about $12 from the upper range of that technical line. I'll watch to see, does it pierce that line? Does it go lower? How's the momentum? And then again, the beauty of what I do is I never go all in on one position or initially on a position, right? So if I do want to buy at 262, I'll probably do like a 1/4, 1/5 position. Then I'll add it to 55. Then I'll add it to 250 and kind of dollar cost average, expecting that bigger bounce here. Now, the nice thing about this is if you look at a move from 480 down to, let's say, 260 or 250, a technical bounce that wouldn't even be that big could take us back to 300. And that's the nice thing about it is you start to get these massive sell-offs that we're seeing in some of these stocks, and the bounces, if we're buying at generally the lows, for a quick swing trade, let's say holding for a day, a week, or a few weeks, we could bounce. We could see literally a $50 move in some of these plays, all right? So again, just something to kind of keep an eye on there. Microsoft, amazing drop on Microsoft. I just love showing this bearish pattern here and how it's broken down, but Microsoft's actually coming into some support here in the pre-market. This, I don't know if this level will hold, but right here around 383, there is support. If it breaks that, my next target's about 364. That would be another major level. But again, you look at Microsoft's chart here, guys, and again, you see a very similar chart to the SMH, even though Microsoft is really not a semiconductor play. But again, shoulder, head, and long, weird shoulder. And then if we flip over to the SMH, look, shoulder, head, and weird long shoulder that has now broken to the downside here. So very similar chart between those two. Now, stocks moving pre-market, take a look at Target. TGT reported earnings today. They beat on revenue as well as earnings. But this is the kicker, guys, is that basically the CEO was on CNBC and he said, yeah, we beat, this is great, but the problem is we're warning for the first quarter of 2025 because of tariffs and because of consumer sentiment. And we all know it's all intertwined, right? So tariffs, the idea is people are scared about tariffs because it's going to likely raise prices. And what's crazy is he even said, and this was pretty surprising to me because I thought it would take a little bit more time, but he said the food supply coming from Mexico is so fast because it's produce, like it's avocados, it's these other things, that literally within days the prices of avocados and these other types of fruits and vegetables will go up probably the equivalent of 25%. So right there, folks, you're seeing inflation in action in real time as it comes up. Now, again, could all of us say, hey, let's not buy any avocados, instead let's buy some of this? Sure, you can, but inevitably that is, again, it's just one more cost being increased that can have an adverse effect on the consumer, which is what his point was, is that the consumer is also slowing down. So for instance, clothes, if they're paying more and they're scared about the economy because of tariffs, they're going to buy less clothes, less other goods from Target as well. All right, so on Target's chart, if we go back to it here, we can see again, there is a major level I will be watching on Target, a big gap fill. Look at this huge gap fill here, right here. So again, a big gap fill in this range. And what we see is it's already trading at 116. The gap fill is at 111. So 111 for me today. If this flushes into it, that actually should be a very, very solid level on TGT. I will keep it on my radar. Next up, let's take a look here at Okta. Okta, again, a great mover. This is a cloud stock, so again, a good report yesterday after hours. And if we look here, we can see, again, Okta trading up. There's a little bit of resistance just above 100. This is a level I gave yesterday in the after hours or in trading the close. It actually turned out to be a good level. I think I said 100.5, and it got to about 101 and change. So it filled, and then look at the pullback here by this morning back to 97. So that trade's already done. I would not reshort 101.50 though. At this point, you have to go out. It's already been tagged. I would look more towards the 104, and then if that gets blown through, the 110 level. As of now, I'm not so keen on trading Okta versus Target. TGT, to me, is much more interesting. All right, let's mosey on over to the big board and take a look at Bitcoin here, folks. So listen, the charts continue to guide us. And I want to be clear on that. Nothing to do with what I think, what I feel. It's the charts, right? We knew the channel here. Which way was it going to break? It broke and it confirmed. Then you got the crazy announcement that caused this massive surge on Sunday from Trump about the strategic reserve. Bitcoin spiked back above the line. But what do we know? If you confirm below a major support, you must reconfirm above to reestablish that support. It did not. It only closed above. So you wouldn't get fooled. You wouldn't say, oh my goodness, it broke back above. It's now a bull market again in crypto. No, no, no. It never confirmed, so it was still a bear market. What happens? Price comes crashing right back in. Pretty remarkable stuff here. I'm hearing a lot about how disappointed Bitcoin investors are about the strategic reserve, mainly because they're upset that it's other coins are being included. And I kind of understand their point, right? Because a strategic reserve should be assets that are limited, right? So Bitcoin has a max run of 21 million, but then it's also including Cardano, it's also including Ripple or XRP, and those do not, right? right? Those could be printed to in oblivion generally. And I think that's the issue from Bitcoiners of why they're upset about this, is that a strategic reserve should have that longer value that against the fiat currency, and it's not going to have that with these other coins involved. And I think that's a little disappointing. Okay, in any case, that's neither here nor there if you're a technician. Frankly, I couldn't care less. It's about the charts, and what do we know? Still headed right down here. This is your level down here. And listen, I don't even know if it'll stop there, but that would be your first level as a technician, where you would say, okay, let's start watching this 74-ish thousand, give or take, level, and let's see, does it hold and does it bounce back to 92, or does it bounce a little bit and then break down? But at 74-ish, give or take, that would be where you would expect some sort of technical bounce. Okay. On to the next chart here. We'll take a quick look at gold and see what gold is up to. And if we flip to gold, it continues its bull move. So it had a basic 1 week pullback here on the charts, and now it's pushing up. And I think a lot of the move up here is that, you kind of got the sellers, the weak-handed sellers, to get out. Now people are fearing where their money is in Nvidia or any of these other players. And what's happening? They're saying, well, where do I put my money? If I'm pulling it out of the stock market, I guess there's not a lot of places. I mean, Bitcoin doesn't look so good right now, so I'm going to throw it into gold, and gold seeing some money flow here. Now, again, if we break above this level here at around 2950, you'd have to think that 3000 level is in play. Taking a look at silver. Now, silver did go up yesterday. It is up a little bit today, so maybe a little bit of money flow there following gold. But overall, this chart, again, is much, much weaker than gold, at least for now. I don't really have much aside from resistance around 33 and support around 3075, 3080 right here. Oil, you guys know I've been bearish on oil down to 66. It continues to make its way there. 66 will be a technical good support. Eventually, I think it gets broken, but we could get a nice solid bounce back to 70 or 72 off of that level. And then I would watch for that bigger breakdown on U.S. economic concerns. And then lastly, I always go over the natural gas chart. This continues to blast higher, but again, it's right into a big level of resistance here. So watch this level, guys, on nat gas. And again, right around 440. Let's see if 440 breaks. If it closes above today, we want to watch for confirmation tomorrow to solidify a real breakout. Just a reminder, guys, what do we have? We have basically a chart set up here where we have data coming out. We have the jobs report. In fact, today at 10 o'clock, the JOLTS numbers will come out. That's job openings. So 10 a.m. Eastern time, job openings. Tomorrow, we have ADP private sector. And then Friday, the non-farm payrolls. And the non-farm payrolls are really going to be big, because generally the markets have wanted a weaker number because they want to get the Fed to cut rates. Problem is, right now, with tariffs and inflation upticking, the Fed can't cut rates. So the market, in my opinion, actually wants a decently strong number to at least show the economy is able to hold up. If the jobs number is weak, like let's say 50,000 or below, I think the markets take a big dump on Friday. We'll obviously have to watch, and I'll cover the number here when it comes out. All right, guys, I'll see you later for Trading the Close. Thanks for tuning in to the game plan and supporting us here at Verified Investing. I'll talk to you later. Take care.